Lovely to see you. I know, I can't see you. But it is lovely to have you here. I'm Hilary Barry. And for those of you who normally tune into 7 Sharp, you can see why I'm wagging tonight, because I'm here. I'd like to extend a virtual welcome to all New Zealanders who've joined us this evening. We're going to have a really interesting hour together. ASB is here to inform and support homeowners across the country, and I'm delighted to be your host this evening to navigate us through the presentations and the question and answer session at the end as well. The purpose of ASB's Home Ownership series is to connect Kiwi homeowners and home buyers with industry experts who can answer your questions and help you navigate the housing market in this COVID environment. Tonight's session is the last in this 3-part series. So like all good TV shows, I reckon we should have a recap. In our first episode, we have an overview of the housing market. We heard from ASB's Executive General Manager Retail, Craig Sims, ASB's Chief Economist, Nick Tuffley, who were joined by CoreLogic's Head of Research, Nick Goodall, on the important things that we need to think about as homeowners and home buyers. Last week, we helped our first home buyers. Craig Sims and Nick Tuffley were back by popular demand and joined by ASB Mobile Lending Manager Louise Stiles and Managing Director Harcourts New Zealand, Brian Thompson. They all shared their tips and expertise to help first home buyers on their home buying journey. So tonight, the last in our 3-part series, we're going to hear from ASB's General Manager, Specialist Lending and Business Development, Grant Gilbert, and ASB's Chief Economist, Nick Tuffley. Again, back by popular demand. And we'll be joined by our special guest speakers, Amanda Watt, who is the Director of Shortland Chartered Accountants. She's a board member of the Auckland Property Investors Association and the New Zealand Federation of Property Investors. And also Nick Goodall is back with us. He's CoreLogic's Head of Research. Now, as homeowners, there's a lot to consider at this time, from forecasting house prices and understanding the housing market to finding out what you need to know when investing in property. Don't worry though, we've got you covered. A little bit of housekeeping first up. No doubt through lockdown you've all become Zoom experts, but just in case, as an attendee this evening, you will notice that you're already on mute and your video is also turned off, so you can relax. You don't have to worry that you're suddenly going to be beamed out to hundreds of people. So just relax. Depending on what device you have zoomed in on, take a little moment to find the Q&A function so that you can interact with us live. So this will be either on the bottom panel or up on the top panel on your device. So just hover your mouse around and you'll see the Q&A box come up, and that's the way you can communicate with us and pop some questions in there. And we'll have some of our speakers will be answering your questions live. And we'll also do a verbal Q&A at the end of our hour together. We've got a fantastic lineup with us this evening, so do sit back, relax with your cuppa or a glass of wine, and let's kick into it. It's great to have ASB's General Manager, Specialist Lending and Business Development with us tonight. Grant Gilbert is joining us live from his home in Christchurch. He's going to give us a brief overview of how ASB is continuing to support homeowners at this time. Grant has been with ASB for 20 years, starting his ASB career in Dunedin many moons ago. He's worked in most parts of New Zealand, some more than once, and has personally bought and sold 10 houses during his career before he settled in Christchurch 9 years ago. His claim to fame in home ownership, you're not going to believe this, he settled a home in Christchurch after a transfer from Auckland on the 18th of February, 4 days before the big quake. So his timing, some would say, is pretty remarkable. Remember too, if you do have a question for Grant, pop that into the Q&A and we'll come back to you with the answers. Over to you, Grant.
Thanks, Hilary. I'm not sure that's much of a claim to fame, but there we go. Kia ora everyone, and welcome to ASB's 3rd seminar on home buying. We've enjoyed bringing you these seminars and connecting with you virtually from your own home. So as Hilary said, if you're in your kitchen or in your dining room, sit back, relax. We've got a great panel for you tonight. Kiwis have a real love affair with property, and that's demonstrated by over 1,000 people attending our first 2 seminars and over 600 registering for our seminar tonight. The conversation in the last 2 weeks has been fascinating, and we've learned a lot about what's on people's minds in terms of current homeowners and also those looking to enter the property market. COVID-19 did have an impact on the market, no two ways about that. but some of those changes have been positive. There's been changes to assist first home buyers and other changes that build customer confidence. We've got record low interest rates, sub 3%. Nick Tuffley's the expert on that. And we've had removal of LVR restrictions, which has provided the bank and the customer with greater flexibility to enter the property market. Keep an eye out for further announcements from ASB in the coming days on our revised position in that field. We'll be sure to surprise and delight. Lockdown did mean that the property market did go quiet, but the solicitors became innovative and there was lots of remote settlements happening. The activity post-lockdown has actually seen some good initial runs with pent-up demand and customers getting back out into the marketplace. At ASB, we've supported about 19,000 customers through the COVID period with either a mortgage payment deferral or an interest-only period. The purpose of that is to provide relief. We're committed to doing that for the long term and making sure our customers get to where they want to be. ASB is 173 years old tomorrow, so happy birthday ASB, congratulations. As an organisation, we're still innovating. That's something we love to do. We brought a new product to market this week called Compassionate Care. And what that means is if a mortgage holder passes away during the period of that loan, we'll cover the interest costs on the loan for 12 months. We're the only bank in market to do it, and it's part of our dedication and commitment to our customers. So check out the details on our website or ask questions through the Q&A. At ASB, we are here for our customers. Our purpose is to accelerate progress for all New Zealanders. That means through all market conditions, and believe me, over 173 years, we've seen a few of those. We want to understand and help you achieve your everyday, one day, and rainy day goals. COVID-19's definitely been stormy, but we can help you navigate and get to where you want to be. So reach out and discuss what you want to achieve, whether it's buying your first home, renovating an existing home, or buying an investment property. And Amanda will share some tips on that. Our goal is to understand and help you achieve what you want to do. We'll understand what your long-term goals are, support you with a structure that will get you debt-free faster. Believe it or not, that's something we absolutely want to achieve. We've built digital goals to support customers. We've got a thing called Home Central, which means that the customer can have the power of their home loan in their hands. You can click in there, you can increase your payments, which will mean that you'll repay your debt faster and become mortgage free faster. So tonight is about you. Ask Q&As through the chat so we can understand what's on your mind and we can comment and give you relevant points. We've got a great panel of experts tonight and we're going to, we've got some great panel of experts tonight and we've got some good material to support you. Back to you, Hilary.
Thank you so much, Grant. I've got a queue for a Q&A just between you and I right now, because I understand that you're an avid sports person, sports follower, and am I correct in saying that you represented New Zealand track and field back in the day?
Back in the day, that was a few years ago, that's right.
Really? What was your specialty?
Believe it or not, one of the worst races in the book, the 400 metres.
Yeah, that's tough. Big lung capacity for that one.
Yeah, I wish I still had it, but I don't.
Lovely to talk to you, Grant. We'll talk to you a little bit later for the Q&A. Thanks so much. Now, we're delighted to have ASB's Chief Economist, Nick Tuffley, joining us again by popular demand from his home in Auckland. Nick has been a fantastic support over the last 3 weeks of the series, keeping us informed on what's been happening both with the economy and the housing market in New Zealand. Tonight is no different. Nick, it's really great to have you with us this evening. Remember, if you've got a burning question for Nick Tuffley, pop that into the Q&A. In the meantime, over to you, Nick.
Well, thank you very much and good evening. Now, there's a few things that I'd just like to very quickly touch on as far as ownership is concerned. So one is just a recap of the housing market outlook, a little bit of a chat around income, rents. Those are the things that you do need to pay your mortgage. And speaking of mortgages, just talking about mortgage rate choices at the moment and where to find some information. So first of all, when we're looking at the housing market outlook, look, prices do go through their ups and downs. It's usually more ups than downs, but we do get occasions where prices do fall. We did see prices fall by about 10% during the global financial crisis a bit over a decade ago. We're expecting prices will fall somewhere between 5 and 10% over the course of this year. Potentially a bit of variation around the country. We do see Wellington and Christchurch holding up slightly better than some other centres. Auckland will be impacted a bit more by immigration than others. And around the country, I think the thing to bear in mind is the dependency on immigration to drive population will have one influence on house prices, exposure to tourism, others. So if you're in a centre where there's not really much of that sort of external immigration coming through, there's less likely to be some effects, for example. Now, I did have a couple of people asking on the chat, or one person asking on the chat, is it a good time to buy in Wellington or Christchurch? So as I said, we do see those centres as holding up reasonably well. Wellington's obviously got a lot of busy civil servants at the moment, as an example. Now, the thing to bear in mind is that there are likely to be buying opportunities over the next 6 months or so. If you buy right now, there's always a chance that prices are slightly lower in 6 months' time or so, but it's always very hard to time the market, and you do have to remember what your goals are as well. Now, the next thing is we are going through a downturn where there is an increase in unemployment coming through. We're likely to see weaker wage growth as well. That's a reflection of a lot of people desperately looking for a new job, and also businesses under pressure in terms of what they can pay. So we are likely to see people's incomes flatten out. So that's just something to bear in mind, is that some of the pay increases you might have been experiencing recently won't be quite so strong in the near term. From a rent point of view, there's always lots of supply and demand in the rental market, and we may see some property investors shifting out of the market, some back in, first homeowners potentially buying their own property instead of renting. There are those things that were going on in the background. One thing we do tend to find, though, is that in downturns, because there is that income pressure, that does tend to constrain the extent to which rents can keep increasing as well. So that's just something to bear in mind in the near term. There could potentially be a bit of pressure on rents if you are in that investment market. Now, the question which I usually get asked every time I go to a wedding at about 1 AM in the morning is my mortgage is coming up for renewal, should I fix or should I float? And obviously I can't really give you a definitive answer to that. It will depend on your own circumstances. But some thoughts on interest rates. As you can see from that chart on the left, now that's interest rates where you've got less than 20% deposit. If you've got more than 20% deposit, the rates are about half a percentage point lower. You can certainly see in recent years that interest rates have come down a very, very long way. And as Grant alluded to, at the moment, we've got a 2-year rate that's 2.69%. So that's, I think, essentially the lowest we've offered for pretty much some time anyway. I can't vouch for what we're offering in the 1870s or so, though. Now, one thing to think about at the moment is what would I be doing? When you're looking at it from the point of view, what are the cheapest rates on offer at the moment? They tend to be the 1 to 2 year interest rates, depending on what sort of special deals are out there. When my team goes through and has a look at the interest rate outlook and does calculations about what's the best thing to do right now, just purely from a cost perspective, it tends to be around that 1 to 2 year mark as well. So from a value point of view, that tends to be one of the better places to consider. Obviously, your own circumstances will have some bearing on exactly what is the most appropriate thing for you to do. Now, where to find out more information? So my team writes a home loan rate report, and we will periodically update that. And that gives you a few thoughts on what we see as interest rate outlook and the various trade-offs and things to think about with the various interest rate terms. And ASB's also got a mortgage rate calculator on the website as well. So you can find those two things by looking for home loan rate report in the search function on the ASB website, or mortgage calculator will get you to the other calculator as well. So those are some good resources to sort of think about that mortgage rate aspect of what you're doing. Thank you, and over to you, Hilary.
Thanks so much, Nick. I promise I'm not going to ask whether I should fix or float, as tempting as that was. But I did want to ask you a mortgage interest rate related question. How low can they go?
Well, I think the thing to think about this environment is you never say never to further interest rate declines. The Reserve Bank is going to be really keen to keep interest rates low for a very long time. That's the really key thing. When interest rates do eventually go up some years from now, it's likely to be very slowly and not very high. So there's always that possibility that rates could fall slightly further. The Reserve Bank has talked about using the official cash rate and setting that negative, which might pull rates down a little bit further, for example. But bottom line is really low rates for a long period of time.
Thank you so much, Nick. We'll talk to you very soon. We're excited now to have Amanda Watt joining us from her office in Auckland this evening. Amanda is not only the director of Shortland Chartered Accountants Limited, she's also a board member of the Auckland Property Investors Association and the New Zealand Federation of Property Investors. With almost 20 years in the industry, Amanda brings a wealth of experience to our panel this evening. We're really lucky to have her. And do remember, if you've got a question for Amanda, pop it in that Q&A for us to cover off very shortly. So over to you, Amanda.
Cool, thank you, Hilary. So, as Hilary said, my name's Amanda Watt. I'm basically a chartered accountant and a property investor as well. So tonight I've been given 10 minutes just to talk about property investments. I'm going to touch on the pros and cons, a little bit about the tax, and answer some questions that people have sent through prior to this presentation. 10 minutes is not a lot of time, so it is a brief overview. Just first up, disclaimer, this presentation is general information. I'm not a financial advisor, and I haven't been able to take everyone's personal circumstances into consideration when writing it. So obviously you need to seek professional advice before acting on it. So property investment, which is what we're talking about tonight, there is a wide range of investments out there, and property investment is just one of them. And then with property investment, there's a wide range in there too. Everything from commercial property, industrial, all the way to residential, a whole lot involved. So I'm just talking about residential investment tonight. If you want more information or really interested in this area, I've just popped the website in there for the New Zealand Property Investors Federation. Now, they're a not-for-profit organisation. It's all about supporting landlords and investors in New Zealand. I am on the board, disclosing interest, but it's voluntary, not paid. And on that website, we'll also have all the associations around the country. So there's about 23 associations around the country, so be one near you. So property investment, why do people do it? So there's pros and cons, obviously. The main pro, I think, and this is me as well, because I've been an investor for 20 years, people know property. You've got your own house, you live in a house, or you've been a tenant, so you know property. And you can see it, you can drive past it. Whereas when you own shares on the share market, it's a lot harder to. Generally, it provides an inflation-proofed income. So we're sort of looking, 20 years ahead, the rents should have gone up. They should have gone up with inflation, bar pandemics, COVID and rent freezes, which only happen once every 100 years, touching wood, they should go with inflation. And capital gains are generally not taxable. And I'll talk a little bit about where they are and what is taxable, what's not. Property markets obviously have grown. There's some perceived tax benefits, which I also touched on. Banks like lending money on property. The main cons are that people see is the value of the property dropping. And it does and can over time. And also tenants. And that's the biggest one with tenants is either damage that tenants cause or not tenanted. This was one of the questions, and also one of the things that people should look at when they're looking at rental property is what is the return? So what is the rental yield? So I thought I'd put in the equation there just to give you an idea. Basically, the equation, rent times the 52 weeks over the purchase price. So if I buy a property for 500,000, the rent's 600, the yield will be 6.24. Now that means that will be your sort of profit, and that needs to cover interest, rates, insurance, repairs, property management fees, everything. So as a general rule, you want that figure to be higher than your interest rate. And so if it is, then whatever the gap is, so we've got interest rates, I know they're at what, 2.69, I think, that's the difference you've got between that 6.24 to pay for everything else. So that would be cash flow positive in this scenario. But remember, interest rates have been a lot higher than that. I think one of mine was 9-10% when I first bought some property. And so if I was buying something with a yield of 6.24, it would be what we call negative cash flow. So the tax side of property. There are some perceived tax benefits, and it's always been a big, out there in the media saying that rental properties or property investment was tax advantageous. It wasn't, and there were no different advantages compared to businesses or other investments. But however, it's kind of been picked on for the last few years. And so just giving an example, if you have run a small business and it makes a loss, you're able to offset that loss against other income. If you have a rental property now that makes a loss, you aren't able to offset that against other income. So it's effectively what we call ring-fenced. It's ultimately a timing difference, so you won't get a refund, but you won't pay tax later on. Now, I don't know any property investors that have got out of the market because ring-fencing came in. We are in property investment. We know that the tax is just a side thing. You never do anything solely for tax anyway. So there's no investors I know that have got out of the market because this came in. But there are a few potential investors that are a little bit worried about this and see it as a disadvantage. It's not, just a timing difference. Now, capital gain is generally not taxable. New Zealand currently doesn't have a capital gains tax. It does have what I call pseudo capital gains tax in certain situations. And with property, I've just listed a couple of them. Buying with the intention. If you ever buy a property with the intention to sell it, you think that the market is going to go up. Let's say, I can't even pick an area right now with COVID, but you're thinking the market is going to go up in an area, so you buy a property. Now, when you sold that property, and if you've made a gain, you'll be paying tax on that gain. They've also brought in the bright line rules, and that actually applies to all second houses, basically. So your main home is exempt, but your holiday home, your batch, your rental properties aren't exempt from the bright line. So if it isn't your main home, it will be caught. And what that does is that taxes the gain if you buy and sell property within a 5-year period. So you'll be paying tax, and it's at the normal tax rate, which the top one is 33%. And of course, if you're a builder, developer or land dealer or associated to them, there's special tax rules as well that can tax capital gains. Obviously, you need to get tax advice before you do anything with property, just to understand it. This was also a question we got asked was, how do you structure, how do you own your rental properties? It is so dependent on your individual situation, but mainly the three common ownership structures is your individual name, look-through companies, and trusts, and it totally depends on your circumstance. So if you want a simple individual name, look-through company has got some advantages that individual name doesn't, but it does cost a little bit more to run a look-through company. And obviously, if you're super worried about your asset protection, you'd be using a trust. So if you're in business with other people, or there's some risk involved. The other thing that touching on just around structuring is your loans. So in New Zealand, majority of the structures people use for rental properties, from a tax point of view, it's the purpose of the loan that makes something tax deductible. So that means the interest on that loan you can claim as a deduction. So if you buy your own home, your own car, or a batch, the purpose of the loan is personal, not tax deductible. However, if you buy a rental property, it's tax deductible. So you've got to be really careful when you're restructuring loans, combining loans, or turning existing homes, your own house, into a rental property, because you want to make sure that those loans make it tax deductible. I was asked this question, so where to buy growing investment portfolio and holiday homes? Now, not really my area of expertise, but given I've been in property investment, I'll give you my 2 cents. But the best people to talk to, obviously, and thank goodness there's the speaker afterwards, that's Goodall, is CoreLogic. They've got all the information about this. You want to research an area, you want to understand where you're buying, looking at the market, what drives that market, he'll talk all about that. Where supply and demand is, Nick Tuffley also talked on this too. And holiday homes, depending on which side of the fence you are, traditionally get hit harder under recessions. So if you're wanting to buy, probably great. If you already have one, probably not. And there are no tax benefits of having a holiday home. In fact, it's disadvantageous if you have one now. This is my personal golden rules for property investment. It's what I've worked to for the last 20 years, is you buy when you can afford to buy. Don't worry too much about what the market is. Can you afford to buy? And can you hold that property for 10 years if something happens? So I used to say, what if you lost your job? What if, something happens, some repairs and maintenance or something needed? Now it's also what happens if COVID, pandemics happen now. And this is my favourite quote around property. And this sort of sums it up. It's not timing the market, but time in the market. So you're not trying to work out when the best time is to buy, but it's the sooner you're in, the longer you're in, the better it will be. I think that's it.
Thank you so much, Amanda. I think a few people just experiencing you breaking up a little bit at the end there, but I think for the most part, we heard everything perfectly. So thank you. Some wonderful advice there. And I couldn't help but noticing a rather adorable teddy in the background. Is that a special teddy?
This is my Harrods work teddy bear. He's a qualified person. Of course, I've got a Harrods teddy bear at home as well.
Oh, well, he's very cute. He's very cute. And look, do stay there because I know a lot of people will have a lot of questions for you, but thank you so much for that presentation. It was fantastic. I'd like to welcome Nick Goodall. We're delighted to have Nick Goodall, CoreLogic's Head of Research, with us again. Nick is joining us from his office in Wellington this evening. And remember, if you've got a question for Nick or any of our other panellists, do pop it in the Q&A functionality for us to cover off shortly. Over to you, Nick.
Thanks, Hilary. Kia ora koutou, everyone. I will just share my screen, so hopefully we'll get that to pop up now and kick into things. So look, very brief intro into who CoreLogic are. We are a property data analytics company. We support pretty much anyone in the property ecosystem, as we call it, that need property data to help them make better decisions and smart decisions when it comes to property. So supporting the banks, real estate agents, valuers, consumers, investors, you name it, generally got something to do with CoreLogic. So great to be able to bring all that data together and then talk about what that means and help people to understand everything to do with the property market. So today I'm going to touch on a few separate things, not the same as usual really, but today I'm going to talk about building, properties, renovations, investments, and just general property statistics, actually. Let's get on my soapbox a little bit for that one. So I'll kick into it. Firstly, I just want to look at what's happening with new builds. So I think many people have probably seen that we're in a bit of a strong building period at the moment, or we had been leading into the COVID-19 lockdown. You can see, especially for Auckland, the blue line on this chart, strong growth. We're really at the peak of our building most recently in the lead up to sort of COVID-19 hitting our shores. We have seen a minor reduction in building consents going through the council more recently. No surprises there, of course. Much more difficult to do any activity through lockdown level 4, and even as things were in lockdown level 3, many people wouldn't have been considering doing anything too major for their property. But now we might see it, hopefully, touch wood and get my fingers crossed there. We're going to be in level 1 next week, and we'll see activity start to lift again. There is a concern around how much consenting might fall away and the construction industry might fall away and the impact that might have. But I think that there's one thing to note there is the government have been pretty openly talking about not wanting to see a downturn like we saw following the GFC, the global financial crisis back in 2008. And they will be watching everything, all the early indicators they can, the likes of Fletcher's laying off staff to make sure that they don't see too much of a downturn. They continue to provide support, whether that's direct to the industry or helping the banks out to continue to lend for new construction as well, because we don't want to be in a period where it's very hard to get restarted and we won't see many buildings happen over the next sort of 3 or 4 years. So one to watch out for, but not expecting those lines to continue to drop away too far in the future. If we look at what's happening with renovations, so of course, you know, as people maybe don't want to move house and difficult to move on, you look at what you can do to renovate your house. We've seen a lot of people, you know, keen to get down to Bunnings in the Mitre 10s and get all the gear you need to improve your own property while you've been sitting around for 4 weeks in lockdown level 4, or even in the longer lockdown period of 7 weeks, I think it was in the end. You know, sick of looking at those 4 walls and look to improve it. We've certainly seen a renovation boom, much like we have a construction boom over the last 5 or 6 years. And things have sort of plateaued out the last couple of years as I suppose the building industry starts to reach some level of capacity. But that's been the case across the country as well. And it is worth knowing that if this is something you're thinking about renovating your property, there have been some recent changes to the Building Act, which mean that there are some things you can do to your property and not require a consent for anymore. Things like solar panels, sleep outs, carports as well. So certainly worthwhile keeping up to date with what's going on there. We know that the data we're looking at here is from Stats New Zealand. It is measuring alterations and additions as measured by the dollar value as Stats New Zealand report it. And we know many consents. You can upgrade your bathroom, your kitchen. If you don't do any major plumbing work, you don't need a consent for that. So there's a lot of work that goes on outside of that as well. So plenty of activity going on there. Really good option for people to look at, especially if you're considering staying in that place for a long period of time. And also if you're looking at listings and there's just not much out there, potentially you're better off just to look after the property and improve the property you're in. On that note, you know, if you are going to improve your property, be careful not to overcapitalize. Essentially, that means you're going to spend more on the improvement than the improvement in terms of dollar value. It will increase the value of your overall property too. So obviously this is going to be different on an individual basis. You could spend 100 grand on your kitchen, yet it's only going to improve the property by 50 grand. You've overcapitalized. If you're going to live in that property for a long period of time, you'll probably bear the fruit of living in a better kitchen, you know, if it's only even just emotionally. So that's still worthwhile. But from a statistical perspective, we can look at the typical value it costs to own a 3-bedroom property compared to a 4-bedroom property, for instance. And looking at that difference last year, you can see in some areas, it'd be better off to improve the quality of your property, like Auckland City, where the gap between owning a 3-bedroom and a 4-bedroom is great. Whereas somewhere like Tauranga, the gap between those two values of properties is much, much lower. So you've got to look at the stats there to give you a fair idea, but then of course everyone's situation is going to be different. There are a number of renovation calculators out there which help you to figure that out. And so I certainly suggest doing the research on that one and making sure you understand what the true cost of that renovation is going to be. We know they always blow out. So always add an extra 10 or 20% on what you think it's going to cost as well. And then moving on to the investment side of things, it's really touching on some of the information that Amanda was talking about in terms of yield. So if you're looking to buy an investment property, maybe you've paid off a lot of your loan for your home, your personal family home, and you're looking to invest in property, the sort of things to understand. Yep, what are rents doing at the moment? And the top chart here is talking about what's the increase in value of property been over time compared to the increase in rents. And you can see that the blue line there, the increase in rents, really hovers around about 5% per annum increase per year, has done for a wee while now, aside from a little bit of monthly volatility, whereas we do have much more variation in the increase in property prices or property values. Over the last few years, rents have actually grown at a faster rate than values have at a nationwide basis anyway. Of course, that does differ around the country. But just as we were leading into the COVID-19 lockdown, we did see values start to increase, which really kept a lot of momentum in the market. And so now people, as we don't expect as much capital growth or likely capital values to start to reduce in the short term, you know, you've got to be considerate of what is going to happen with yields. Are you going to make money by owning that new investment property? And that's where you use the calculator that Amanda talked about to figure out what the gross yield on your property will be before any expenses come out. And at a statistical basis, you can see the second chart here is looking at, you know, for Auckland, based on the average price, which we know is very high, over $1 million, you know, your yield is going to be over in that 2.5% to 3%. On a statistical basis, you'll definitely find properties that'll be higher than that, and some will be lower. Whereas at a nationwide basis, because property is more affordable around the country, the yield is a little bit higher as well. And just remembering that, of course, this is based on gross yield before any other costs come out. I've included a link on this, and should have mentioned earlier, this slide deck will be available to all attendees today, so you don't have to worry about screenshotting or taking any notes down. You'll have all this information available to you to peruse after the seminar's finished, including the link there, which actually we literally just released this morning. Calvin Davidson looking at which property types provide the best rental yield. So is that apartments or 3 or 4 bedrooms? So there's some information there which will be helpful if you are considering getting into property investment. And finally, to finish today, my kind of, Stats 101, I suppose, lecture for the evening. I'll try to keep this relatively brief, but it does get me a little bit passionate because I'm a bit of a numbers geek. And it's what I'm basically tasked to do every day, is to understand all the data, different measures that are out there for homeowners to understand what's going on to help them make better decisions as well. So I'm going to jump through a few of these very quickly. House price index. Now for me, any house price index that's out there, it measures the change in value of all property in an area over time. Really good measure for understanding market performance and change over time. In this instance, we've pulled out a stat, plus 7.9%. That's a standard way of understanding how a house price index moves over time. And that'll be like an annual growth of 7.9% at an average level. A median sale price is a little bit different, and we don't like using median sales prices when we're trying to measure market performance over time. Really good for understanding what happens to be selling in an area, whether that's at a suburb level or a city level, what properties tend to be selling for. We know that 50% of properties are selling for under that and 50% above that. So it can give you a fairly good idea about whether you can afford to live in a certain area or not. Listing price. Maybe a little less useful even in that sense. Really just tells you what people are expecting to get for their property, but can also be used as a marketing tool. You might reduce it to get more people involved and more people interested in your property, or keep it high if you don't want to have too many people coming through your open home and you're confident of getting a high price anyway. So it's not so useful again when you're trying to measure value change over time or what the market's actually doing, just telling you maybe what vendors' expectations are like at that specific point in time. The median value, similar to median sale price, but it's looking at all properties, not just what happens to be selling. So it can give you a good feel for what all properties are worth in that area. And a number of different organisations, including CoreLogic, produce this and make that available to people. And then the CV or the RV, the GV, so many different names for this. It's the capital value, the rateable value, the government value. And this is the figure that the council puts on your property every 3 years. It is a market rate at that one point in time. Pretty good estimation of what you'd be worth, but it's really used to apportion what sort of rates you will pay for the next 3-year period. So not so good once obviously that time period has passed. And the final thing I want to talk about today, which ties in nicely with ASB, is that I know many people on this seminar tonight are ASB customers. If you log into your internet banking, you will see Home Central. You can get a current market value of your own property that you own if you've got a mortgage with ASB right now for what you might expect to sell that property for, or if you went to the bank, what they would assess the value of that if you want to get a top-up loan, or if you were looking to get some money to try and raise some funds to buy another property. So really useful one there. Gives you a value, $900,000. And a range for what that might sell for as well. And that's supplied by CoreLogic, so of course a little plug for that. So that'll close me out for today, except to give a final plug for my own podcast that we do on a weekly basis with Calvin Davidson, our senior property economist, just to really take account of all the data that's out there on a weekly basis, 20 or 30 minutes. So go and check it out in whatever podcast player you listen through, and please subscribe if you are interested and give us a rating. Here's my plug. Back to you, Hilary.
No, I love it. I love a lazy plug. Good on you, Nick. Hey, last time you joined us, you were talking about your bubble being pretty frantic on the home front. How's it all been?
Yeah, no, pretty good now. Obviously, the early on days in lockdown with 2 toddlers and a newborn. The newborn has now gone 12 weeks or 3 months now, so I feel like we've reached that first milestone point. And Nana, who has been able to come up from Invercargill, she's just arrived yesterday, so she's finally got to meet her granddaughter, so she's very happy, and she's lovely. The office.
God bless level 2. It has been lovely seeing grandparents reunite with their grandchildren. Thank you, Nick. And we'll get to some questions for you now too, because we have had a lot of questions from homeowners across the country for our panellists. So this is the time that we're going to launch into our Q&A session. Now, because we have 5 speakers this evening, myself included, if you have zoomed in on a phone or a tablet, you might need to swipe your screen in order to see all the speakers. So if you hear someone talking and you can't hear them, swipe your screen and that will lead you to more speakers. That's how it kind of runs. Okay, so I'm going to get into a question first for you, Grant. Are ASB applying tighter lending criteria than before the virus outbreak?
Thanks, Hilary. The answer to that is we're here to support people in the current environment. So we need to understand the impact of COVID on people's income, and we need to understand, I guess, the reality of property movements. So it's not a simple yes we are or no we're not. We're absolutely open for business. Our responsibility is to make sure that New Zealanders can continue to afford to repay the debt that they borrow at any point in time. So what I would say is reach out, let's have a discussion around what it is that somebody's looking to do, and we'll individually assess that and give an answer.
Okay, great. Thank you for that. A question from Luke, who's in Hawke's Bay. This one is for Nick Tuffley. What are your predictions around future property price reductions? What can the regions expect, and how long can we expect this downturn to last?
Okay, so just remember that crystal balls are a bit murky at the moment, but our view is that prices will fall somewhere between 5 and 10%, and there will be a little bit of regional variation, but to some extent we're all in this together. So I'm looking at Hawke's Bay. Some of the things that will be influencing the property market there, for example, are it's not so exposed to the immigration inflows in the way that, say, Auckland is, so that will help to a degree. It's not so exposed in that way. From an export sector, quite a diverse range of exports there. One of them is fruit, which is doing really well. For example, meat exports we think are likely to see the prices increase once we get through the drought period, as some examples as well. So there are some of those factors that mean that Hawke's Bay may hold up so reasonably well around that sort of rough average that we expect. In terms of timing, look, most of the impact on prices we would expect to see shake out before the end of the year, really. It's really the next few months where there's a lot of uncertainty and people aren't quite sure where things are going, and that there'll be that, probably that heightened jobs, concerns around job security as well.
Just sneaking in a quick live question for you too, Nick. It is interest rate related. I know you love those ones. This is from Nick. Fix for the short term or fix for the long term? I have 20 years to go and would like to understand where you think rates may go. So get out that crystal ball.
Well, look, I think for quite a number of years, we're going to have quite low interest rates, full stop. I think when you're making a decision right here, right now, most terms you can get the maximum interest rate fixing that you can do is for up to 5 years. Over that time horizon, it still looks best to be looking around the 1 to 2 year rates, depending on what is on offer. Those rates look to be the sort of better value for now, given that when you have to refix, rates are still likely to be very, very low.
Thank you for that. Question for Amanda. This is a question from Debbie in Auckland. What are the things I need to consider when helping my kids into their first home using the equity in our property? I'll just get you to unmute, Amanda.
Sorry, is that working?
Yes.
Microphones from the last one. So not really an accounting or tax question. So if you're helping someone in, it's not going to have an accounting or tax effect. But what I see, and we have a lot of clients that do help them, and the banks will probably have the answers as well, granting that, is that it's best, if you're helping your child into a home, is not cross-guaranteeing your house. The best way I've seen it doing, you're borrowing the deposit against your house and then helping them in. I also was thinking about this question, and I thought there's a lot of people out there that have thought, what if I buy a house now for my child and I'll give it to them when they're 18? There are tax consequences around that, so definitely check those out. But that's obviously doable, and obviously it's cheaper to buy a house now than probably in 18 years' time.
Thank you, Amanda.
Hilary, can I jump in there?
Yes, you absolutely can.
So I guess the bank of mum and dad is a real thing in the current environment, and there are different ways, as Amanda said, of structuring those things, and all of those come with different risks. So 2 things: one, have a conversation with us and also seek some legal advice, because there are things like matrimonial property issues and all sorts of things that you can run into. So go in with your eyes wide open, but the bank of mum and dad is a reality, and we can help structure something that works.
Thank you for that. A question for Nick Goodall. This has just popped up live. I have a question for Nick. My house is worth more than what it says on ASB and CoreLogic, but I did renovations on my house by adding an extra deck and adding another room in the house. How can I get the figures changed?
Yeah, ultimately any assessment of value can only be done on the data that we have. So if that hasn't been notified to the council, essentially, that you've changed the details of your property, if you've upgraded or you've extended it like you have, then they won't be able to be reflected in your in the evaluation of your property. If you want, you can provide that information to the council so they know that you've got a 4-bedroom place or it's increased. And or if you want a proper full market valuation, you can get a valuer to go and value your property. The key question has to be, why do you need that to be reflected unless you're going to draw down on that money? Because you may be better off keeping the value lower and paying less rates potentially on that property. So the key question has to be, why do you want it to be higher? If you're looking to sell it, then yep, absolutely, you want the valuations to be as high as possible. If you're looking to hold on, maybe just keep it where it's at.
Just while you're there, Nick Goodall, Deirdre asks, how is the value assessed single level versus 2-storey? 2-storey dwellings appear to show as worth more on the same street, even though there may be less square meterage and the house might be a similar age or quality.
Yeah, so the valuations we have taken to account every property characteristic we can think of and that we have available to us. If we do see that of the model, because it's a model that performs this valuation, if it's noticing that properties that are 2-level, but everything else is the same as the 1-level properties are selling for higher prices, then the model will reflect that and it will assess those properties at a higher level. The potential is there that there might be something else that's going on in assessing those values, but it's very difficult to be able to understand why one thing might be impacting or influencing the value of a property more than another. It could be other things like view or something else that you're unsure about with that property.
Thank you, Nick. A question for you, Amanda. In March, the government announced a freeze of rent increases and extension to no-cause terminations. The measures are great to support Kiwis to stay in rental properties. What were some of the challenges these changes have had on landlords? That's from Marg.
So, I mean, we've only had a couple of months of this, and it was obviously, I think what happened, it was everyone's in it together, and that included, landlords and tenants. Obviously landlords were just people as well, and a lot of them had lost their jobs or had been cut back as well. But I think what happened, I mean, rent freezes, first time I'd ever seen it in my working career, but I get it, I understand it, and most people, a rent increase is only, 20, 30, it's not a big amount, so people could, they'd have the buffer for that. I think the biggest issue with COVID was if you had an empty property before lockdown, and you still have an empty property after lockdown.
Yeah, absolutely.
And then, all our tenants, you just talk to the tenants and you came up with a way to work through it. So, and I think most landlords that I know, that's what happened.
Thanks, Amanda. Got a live question here for Nick Tuffley from Philip. What is your view re a third wave of shock from a global recession?
Well, it's probably losing count of how many waves we might be having. We're obviously having one big, massive, I guess what I'd call an absolute tidal wave at the moment, tsunami, in terms of what COVID-19 is doing to economies around the world. What it does mean, though, is that many countries will be vulnerable to anything else that might come along from any direction, whether it's a financial crisis, whether it's China and the US causing more tensions, things like that. So the key thing we've got to remember is that we are pretty vulnerable to other major shocks coming along when we're still dealing with a pretty big one at the moment. So fingers crossed we don't get too many more. You never say never. This is probably the biggest shock that I think most of us will ever see in our lives, I sincerely hope. Thank
you for that, Grant. A question for you now. This is from Gary in Auckland. What is the bank's likely response to stressed mortgages?
I think the answer to that is we're here to help. It's in nobody's interest to proceed to a mortgagee sale. So if people are feeling stressed or they're needing some support, is reach out, have a conversation. Communication is absolutely key. The biggest thing we find when people become stressed is they tend to withdraw, they don't communicate, and therefore we have no real way of understanding how to help. So please, my absolute answer here, having been in this industry for 30 odd years, is if you're feeling like you need support, ring, have a conversation, and we'll work our way through it together. As I say, it's in nobody's interest for us to proceed to things like mortgagee sales or other things.
We've got a couple of questions, just while you're there, Grant. A couple of questions have come through about LVR rules. Will ASB recognise the removal of LVR rules, and do you see that as a permanent move?
The answer to that is yes, we will recognise, and we have recognised the removal of LVR rules. And will it be a permanent move? I guess the RBNZ have said, I think, Nick, it was 12 months that they're gone for in terms of legislative. People are nodding, yep. So 12 months. After that, we'll wait and see. I guess that'll depend on how the market responds. At the end of the day, it was brought in to control capital escalation and property values. If the market gets away again, who knows, it might come back.
Thank you for that. Nick Goodall, a question for you here from Mina. What return should we expect from property investment at this stage over a period of, say, 5 years?
Oh, look, that's quite a tough one, really. I think that it's always going to go to personal situation. I think my advice is always, if you're buying an investment property, is that never buy on the promise of capital gains. So it needs to look after itself, make sure that it's yielding the investment return that you need, and that if you're using it for tax or you're getting tax benefits as well, it's working. But always plan for the worst. So maybe no capital growth in 5 years, and then anything on top of that is a bonus if you do have to come to sell at any point over that next couple of years.
Good advice. Thank you very much, Nick. Another question for you, Amanda. This is from Jan in Canterbury. A concern for many entering the investment property market for the first time are reports about high unemployment and prospective tenants' ability to pay rent. What measures can a landlord put in place to safeguard against these concerns?
Well, a bit of what Nick was saying, make sure that when you buy your property, you're buying with a good yield, you've got a buffer there. And then in a good location, that you've got other options. So if you buy in a small town that's got one industry and that closes down, then you've not got a lot of other options there. But also a lot of people will buy property, they've done the research of the areas and then have some options. Also with residential rental property, which is why people prefer it over commercial, is people always need somewhere to live. So you keep dropping the price down, and I think we'll see the rents coming down. I know Trade Me's saying it's not, but I think they're coming down. That's what I'm seeing around. So the rents are coming down because to get people in. And then always have a buffer. Don't go into it. That's when people would go in with really tight, and if a tenant didn't pay, they couldn't pay the mortgage. That's just the wrong time to go in. And I think the banks have got a lot better over the years. Sorry, not that you're bad. But like you won't lend money to people if they can't afford it. So, at one stage you wouldn't want 95% mortgages on rental properties. So that's all there to protect the consumer.
Thank you so much for that. Nick Tuffley, a question for you. If I'm looking to buy an investment property, is there increased stock available that will drive down prices, or do you expect this to remain steady or drop off in the current environment?
My thoughts are that over the next sort of while, there's likely to be more buying opportunity from the point of view of less competition. There'll be some people who are hesitant to get into the market, and that opens up the way for those who are prepared to dip in. Those who feel confident about their financial situation, for example, will feel more encouraged to take risk. But reality is what we do tend to see is in downturns is that sales turnover tends to slow up, because we also see those who don't need to sell decide, right, well, I'll just wait until times get better and they don't list their property, or they take it off. So we do tend to get some sort of balancing out. So we may see lower sales turnover overall, but there will be those people who feel more pressure to sell than others as well. So look, it is a time where there are likely to be bargains to just keep an eye out for.
Excellent, thank you. Question for you, Grant. I'm looking to purchase an apartment. This is from Vivendra. What is ASB's policy on buying an apartment off the plans in Auckland?
So let's start with the short answer, and that is it will lend up to 80% of the purchase price for an apartment. After that, there are some things that we need to consider. So there are considerations like, is the apartment serviced? Is it subject to a management contract? Is it a non-purpose build? All those things will mean that we might pull that 80% back slightly. So the answer to that is we'll go up to 80%, but again, reach out, have a conversation with us, and we'll guide you absolutely dot to dot after that.
Thank you so much, Grant. Now I've got a question for Amanda from Jeff. This is a live question just come through. What are the tax benefits on working from home? Are they worth claiming? And can we claim for the short term where we've been working from home due to COVID?
It depends on, if you're an employee, you can't claim any expenses, but the government put through a special, or IRD put through a special $20 a week that you can be paid. So all employees can be paid that from their employer, and it'll be tax free if you've been working from home to help to cover that, and plus a one-off $400 for, you know, assets, and you don't need to prove any of it. So I mean that can help employees and employers, because they had to pay for a lot of things back in the office. For individuals, if you're in business and you run a home office, then it's totally worth it from a tax point of view. And why I say that is because you're already paying all of those expenses. You're already paying interest on your mortgage rates and everything. So it's I think it's always worth claiming a home office if you meet the criteria of having a home office.
Thanks, Amanda. A question for you, Nick Goodall. With the forecasted drop, this is from Alison Bay of Plenty, with the forecasted drop in house values of 5 to 10% and the costs involved with renovations, at what point do I work out if I'm overcapitalising?
That's a really good question, because it is really difficult to assess on how much, if you're going to spend 50 grand on a renovation and you don't actually know how much your property is going to be worth at the end of that. As I say, we do have a renovation calculator, which says you can put all the characteristics you like. My property is this big, this many bedrooms, it's in this area, and we can assess what we think that property will be worth in today's market. So you can say, if you are going to improve this one or two things, we think it'll be worth X amount. So I try and hunt out one of those calculators that can give you more specifics on your property. It's going to maybe 100 grand more. You do $50,000 worth of work on it, and that's into the market, and people are expecting it to drop by 10%, then you might want to factor that into it as well. If you are looking to renovate and then immediately sell, and you sell in 6 months' time and there's an expectation of a drop of 10%, then you may need to factor that in. And so, yeah, it's a tough one to answer the specifics on, but there are tools out there that can help you do that.
Thank you, Nick. A live question for Nick Tuffley. This is from Marshall. And I know that you've mentioned it in passing too, but I've also had some other questions come through about regional stats. Which places would be potential investment opportunities in New Zealand apart from Auckland moving forward? This is a very popular question.
I might also get Nick Goodall to chime in too after me as well. So Auckland rental yields tend to be lower than other centres. So some things that I would look at from the point of view of a longer term is generally centres that have got pretty decent population growth going forward will be ones where you're likely to have the value of land go up over a long period of time, as one example. So that Golden Triangle around Auckland is not a bad area. Places like Christchurch, now I might be biased, so I may have grown up in Christchurch, and that's a place where there tends to be fairly strong population growth coming through as well. But I think from a investment point of view, it's about making sure the numbers work, and location can also be about where you are living, the market that you're used to, and also remember if you're living in Whangarei and investing in Invercargill, it's a bit of a challenge to drive by and just check that no one's burnt it down in the meantime as well. So there are some of those practicalities as well. So look, I'll throw over to Nick Goodall in case he's got some other things to add in.
Do you know him from Whangarei? Was that a dig at my hometown, Nick? That's a little bit close to the home, mate. Look, I think the only thing I'd add is that, understanding the economic base, what people do, what sort of tenant are you going to get into that place? So if there's a place that there's going to be a wide range of tenants, are they going to be professionals, or are they going to be someone that's a labourer? you know, what in that area, what are people employed by, and then what's the outlook for that part of the market, for that economy as well. And that's where, you know, the likes of, you know, Nick Tuffley's advice around, you know, what parts of the economy are going to do well in the foreseeable future is good to understand, because that tells you what jobs people will be doing that might be the tenant of your property, and how likely they are to be able to keep up with their rent payments, and the long-term future of the value of that as well.
Thank you so much for that answer, and thank you so much for your fantastic answers to all of our questions, Grant, Amanda, and our Nicks. This wraps up the formal part of the evening. As a homeowner myself, I know there's a lot for us to consider right now, and tonight has been really helpful. Maybe like me, you at home have taken notes. It was quite handy, really. To sum up some of the highlights from our speakers tonight, Grant shared a number of things, and as you can see, when you're doing live podcasts, one can lose one's place even electronically. He shared a number of ways ASB is helping homeowners at this time with mortgage deferrals and compassionate care, and I know so many customers will have been very grateful for the care that they've had at the end of the phone during what has been a really tough time. Keep in mind his advice: focus on that one-day goal. Nick Tuffley gave us an insight into what's happening for homeowners in the New Zealand economy and the housing market. He says it's an attractive market for borrowers, so do keep that in mind. Amanda reinforced the important things that we need to consider if we're looking at property investment in the current market. She had some great advice. 1, buy when you can afford to buy. 2, can I hold it for 10 years if something goes wrong? And words to invest by. This was my favourite. She said, it's not timing the market, but time in the market. Sage advice. Nick Goodall, a self-confessed numbers geek, proved it by breaking down the numbers and interpreting the data. Bless him. He talked about ways to add value to your home without overcapitalising, and for landlords, how to look at your rental yields and property performance over time. As I said, plenty of food for thought in the days and weeks ahead. Now, this is the third and final episode in ASB's Home Ownership series. We really do hope that you've enjoyed our time together. I know I certainly have. I won't know what to do with myself next Thursday. I'll have to turn up on 7 sharp. That'll be a shame. We'd love your feedback on how you think we went tonight, and you'll receive a brief survey shortly where you can also ask for the friendly team at ASB to give you a call as well. Our wonderful guest speakers and I will be sticking around for the next half an hour, and we're available to answer your questions in the Q&A section. So do stay online. Don't leave the Zoom session just yet. Pop any questions in the Q&A function, not the chat function. The chat function is not your friend in this circumstance. I know, I can see what you've been up to during this session. Get out of the chat function. Q&A. I've told you all night. Q&A, 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 and that's where our panelists will be able to answer your questions. Otherwise, thank you so much for joining us. It has been a pleasure being your host this evening and across the entire series. I hope to see you again very shortly. And of course, it is ASB's 173rd birthday. I hope to live to 173. Don't worry, I won't still be on the tally at 173. You'll be relieved of my duties. Congratulations to everyone at ASB, staff and customers alike. Have a very happy birthday. I hope this cake, I'm not sure we can have communal cake in level 2, maybe level 1. Anyway, maybe one person can have cake and someone else can have their own. Anyway, have a lovely evening. It's lovely to see you. Take care. Cheerio.